Business significantly. Mark Galasiewski says this too shall pass, not just for Weibo, but for all China stocks. Get in now. He is the chief equity analyst for Asia at Elliott. But Gordon Chang, author of The Coming Collapse of China, begs to differ. All right, Mark, I want to get to you. State your case that it's time to buy China.
Okay, well, I think Gordon and I are probably going to be speaking two different languages and also using different assumptions. He'll be extrapolating fundamental trends, and I'll be using technical analysis, in which you can actually anticipate highly counterintuitive moves. And we've seen one so far already this year. Can you name one major global stock market index that is above its January highs? Well, guess what? It's in southern China. It's called the Shenzhen Stock Exchange. It's China's second largest market, and it's the home of the growth stocks in China, similar to the NASDAQ in the United States. It's been outperforming for over a year, and that outperformance has simply been continuing with the coronavirus providing a temporary setback. But it's continuing, and that's where we're sticking with that trend. But there's some other evidence that I'd like to consider in addition to the pure technicals, and that is one that's also quite counterintuitive, particularly the timing of the outbreak of the coronavirus in China. Here at Elliott Wave International, we have long observed for over 2 decades a relationship between stock market prices and outbreaks of infectious disease, if you can believe that. Specifically, outbreaks of infectious disease tend to occur after stock prices have declined for some time. It's part of the breakdown in social conditions that tends to occur during bear markets. And we've got some evidence to support that.
Yeah, we
so
just
if you could bring up the first chart, if it's not already there.
Hold on a second. We just showed the bird flu epidemic from 2013, and if we can put that back there, you can see that dip. Hold on a second. And then shortly thereafter, possibly about a year or two, boy, it sure looks like the best buying opportunity. Using that piece of evidence, Gordon, what's your response? If we're just talking about good opportunities to buy stocks cheaper, why wouldn't you buy China?
Well, if you can make a short-term profit, why not? But the problem here is that coronavirus is not SARS, it's not MERS, it's not H1N1 swine flu. The problem is that this is a much more transmissible bug. It is one which is far more dangerous to economies. Also, we have a China right now that even before the coronavirus was only growing at 1 or 2%, if it was growing at all. Right now, it's contracting. The Chinese government is doing its best to hide information. So I'm not so sure that we can actually say that there are buying opportunities, at least in the long run. The one thing we know, Liz and Mark, is that China manages its markets. It might manage them up a little bit, but it really can't defend itself against the fundamentals, and the fundamentals are overly negative.
Mark, China is not known for its transparency. It's not known for its clean numbers. But what would you like at the moment when you're looking at Xi Jinping wearing a face mask? You're saying that is the very time you should go in and buy what? What types of names?
Okay, well, if I can first rebut Gordon's issues there. First, regarding the coronavirus, Gordon, you know as well as I do that the Hong Kong flu of 1968 killed 500 million people worldwide. I'm sorry, not 500 million, sorry, 500,000 people worldwide. That's a pretty serious epidemic, and yet the Hang Seng Index, where the outbreak occurred, roared after the 1967 low. So, you know, financial prices and stock market prices in particular are not necessarily tied to the fundamentals on the ground. Financial prices lead, the market leads the fundamentals, and what we've been seeing, the outbreak occurred after a 4-year decline. Now the market is rising in the opposite direction. So the market is leading the fundamentals to come.
And you like the bat stocks, of course. I'm thinking Alibaba and some of the other names that are out there. But Gordon, you get this final word here on what looks like, at least eventually, to be a great opportunity to pick up some solid names that will still be around even after this virus dies out.
Yeah, I'm also sure that you can carry the bounce in other places as well, in markets that are more transparent, in markets where you don't have to worry about this government intervention, and in markets where the economy is probably not going to collapse. And that could very well be China right now. So you're dealing with fundamentals that are unknown and actually can be quite severe.
Mark Galasiewski, Gordon Chang, great to have you. We'll have you back. And I'm watching, Mark, because I'm very interested in sort of that Buffett theory that you definitely want to buy low when everybody's running away. But is this the low is the question. Good to see you.
Swine flu in 2009, SARS in 2002. Buy the market.
Yeah, well, those look like great opportunities in hindsight. Closing bell ringing in 16 minutes.